Hello, money miners. Welcome to the most accurate mining news you will find, just as accurate as the Axis mining technology, gyro and core orientation. I'll tell you what, talk about geo and driller's best friend. Axis mining technology are
a company that our clients can believe in. A company that our clients can trust.
Accurate like you, mate. Street Talk got it wrong. It was POSCO, not POSCO. It was LG Chem, just like you predicted with Liontown.
Piece of bloody cake. Don't worry about Street Talk. You just go straight to @MattyMichaels on Twitter, and that's where you get the most accurate information.
How
much more accurate are my things now since Axis come on board? Isn't that a coincidence?
It's not.
Right, boys. Liontown have been bloody. They were supposed to do a call at 11 o'clock, but they've been piss farting around, and it was at 12:30. But big news coming out of Liontown around debt funding, and we're going to get right into it. Bloody pretty, I would say right now, pretty fucking good outcome for them.
Yep.
So we've also got WAF. JD, you love WAF. And
I always end up chatting about them. Also Centaurus, mate, you're going to go into them. That was a long-awaited feasibility study.
Couple of quarters late. You could say 1 quarter, maybe 2 quarters late. It's just in the first week of this quarter. So then a couple of stragglers out the arse end, 29 metals. Met coal, bloody hell, met coal is the new manganese. Cobalt and Avebury. Mate, she's just it is all happening. Right, let's kick it off with the old, you'd say the previous spodumene market darling, but this is elevating Liontown back to a resemblance of who they used to be, maybe, possibly.
We used to talk about them all the time, and it's been a while since we've had a good yarn about Liontown, but it's not via any lack of activity. They're obviously, all systems go at Kathleen Valley, and they're all systems go on our podcast today, Matty, because that was like what we were all bloody concerned with today.
Well, and considering after the $3 bid era, closing at 89 cents yesterday, they went into trading hold immediately this morning, and it was like there was continuous disclosure about their debt funding, and everyone's like, is it good? Is it bad? Everyone's thinking, oh shit, it's been bloody pulled, whatever. But it's you take us through it, Trav. You're in the bloody weeds. What's actually happened here?
Well, it was a bit of a journey this morning, wasn't it? When you see their trading halt, and the wording in the trading halt was something to the effect of, in a trading halt relating to, the funding of Kathleen Valley, something thereabouts. It didn't state a capital raise like you normally see when there's a capital raising. So you thought, okay, this isn't an equity raise, but it might be something to do with their debt facility. And there was definitely a bit of an overhang out there in the market in relation to that debt facility, which was in place prior to today. That came out in March, and it was a revised $550 million debt facility, if you guys recall. Liontown in March, they basically revealed that their lending syndicate, there were fewer banks on the ticket, but instead of doing the standard project finance facility, they were going to do this like bridge facility, which had to be repaid in a little over a year's time at 31st of October 2025. And if you cast your mind back to what was in place even before that, everyone thought their debt facility was like locked and loaded, but it turned out that they had to throw in a different lithium price tag, which included supply from other parts of the world which weren't being included before, and all of a sudden it wasn't meeting the thresholds of some of the just getting these lending syndicates in place is bloody hard, and people are pretty conservative.
That was I guess you'd say the commencement of lithium really going to shit.
Yeah, grim. Yeah. And so when we saw them in trading halt, like the first thought I had was, have they actually satisfied the CPs in that latest syndicate that we saw, the bridge facility? Because there were a few like CPs there, and one of them was in relation to providing a base case financial model based off independent price forecasts, and they basically had to show that that they were going to be in compliance with certain financial ratios. I assume sort of some
being able to pay the fucking thing back.
Exactly.
And one of the key components there, fellas, and that sort of related to the size of it, 550, like you said there, Trav, was that the banks and the syndicates wanted to be top of the stack when it came to priority if things went tits up, and that meant they would have to pay out forward to earn their place, which I'm sure you'll get into how the new deal has been structured.
Exactly right, mate. And so, we were looking through all of that and just sort of, chin wagging what's going to happen here. And then we saw Street Talk break a story. I reckon it was around it must have been around like 10 a.m. Perth time, and they come out with this story saying there's a deal with Liontown, and it's an offtake deal struck between Liontown and POSCO to cut out the banks. And so we saw that headline and just thought that doesn't quite make sense. POSCO offtake. I mean, it just seems like the funding quantum. If it was just purely an offtake instrument, you're not gonna solve the funding gap and cut the banks out with just an offtake alone. You need some sort of other instrument in there. And Matty, you're all over this because Street Talk was wrong, but you're tweeting out the right information.
I'm going all in on LG. I even said, I said the bad version would be funding pulled. Good version, maybe like a convertible debenture with like a supply chain supply chain bloody entity. So, and I did initially say LG or Tesla because I'm thinking, well, it won't be Ford because I think Ford changed their mandate.
Yeah.
So,
you're looking at their
and then I just
existing
went all in on LG, and as we said, that's why we're bloody the one-stop shop for information.
Is LG Korea? Is that where they're based? Because you're all about the Koreans these days.
Yeah, mate. Yeah. I'm probably going for a site tour soon just because I'm like possibly going to be the ambassador
for Korean uranium. That's still
Japan and Korea. Oh.
Love it, mate. Anyway, you're on the money, so good on you, Matty.
Maybe they're trying to get to me via Liontown in regards to uranium, but anyway,
makes sense. So when Liontown dropped the information about what the big funding announcement actually was to ASX, like later in the day, a couple of hours later, it's this basically a convertible note with LG Energy, not POSCO, and I'll summarize the high level details. So basically, LG is effectively providing Liontown with a US $250 million convertible note, which will make the banking syndicate basically null and void. It'll be cancelled. And instead of replacing that $300 million drawn Ford debt facility, which is on pretty amazingly like low cost terms, that's actually going to remain in place
and good covenants.
You wouldn't be able to execute something like that today, just given where the world is.
Especially considering back when it happened.
Yeah.
It just got given to them.
Yeah.
Like, they're just like, take our money. Yeah.
Yes, exactly. There are, I think, some, pretty important terms of this convertible to keep in mind. So Liontown, they're going to get that $250 million in the door, which is roughly about 380 million Aussie dollars. The note has a maturity of 5 years. Interest rate is pegged to SOFR alone. So there's no margin on top of that SOFR. It's just pegged to SOFR.
Now, this is just to be clear, this is the one time that you don't have to disclose what the margin is on top of SOFR when there is no margin.
Very true.
Very well done, Liontown.
The interest can be capitalised for the first 2 years. Conversion price is fixed at $1.80 a share, which is basically double what the share price was pre-announcement of this. There's an important kind of detail here. So LG, they're the party that has the right to convert the instrument at any time. So it's not like Liontown gets to choose conversion. There's no mandatory conversion element to this convertible. So in fact, the note will be redeemed in its entirety in 5 years' time, which means Liontown will have to stump up the US $250 million in principal plus accrued interest, assuming that LG Chem doesn't convert the note, and they won't convert the note unless the share price goes north of $1.80, right?
And that interest as well can be capitalised and it can be issued in shares as well.
Yeah, so, for the first 2 years, and then it sort of there's a few adjustments, but
after 2 years it can be issued in shares as well. So
all of this comes with a catch though, because that's a pretty useful instrument for where Liontown are at this point in their life cycle. But LG Chem, they don't just want to provide amazing financing terms for no reason. They've got an interest in the product, and so the catch is that Liontown's production is now going to be substantially more contracted with added offtake to LG Energy. They're getting an additional 125,000 tonnes of SC6 spread across years 1 to 5, or you can think of that as like an extra 25,000 tonnes per year in those years. But the total offtake period now extends to 15 years, previously 5. So it's a lot more back-ended here. You can see on this chart here, years 6 to 10 are 160,000 tonnes per annum, and then years 11 to 15, 140,000 tonnes per annum, plus, a flex if downstream refineries develop. But let's just ignore that for now, and you can see what the added offtake kind of does to their production profile.
Yeah. So, and in the questions as well, you're going to go through some of the comments. Obviously, you can never see. He didn't answer anything regarding what the pricing mechanism will be with LG. So that's
no caps or collars. That was the, but I just imagine there's some market reference kind of pricing mechanism. But
yeah. So there's,
I think
as I said, you got to figure it out once the revenue comes out.
Yeah.
Effectively.
I think you've hit the nail on the head there, Matty. The terms look great, and we've seen this in the past with financing for projects and all these sorts of things. And the way the financial players make the cash back, or it looks a bit different, is in the terms. Whether that be hedging or offtake or whatever. And they kept the cards pretty close to the chest with regard to what LG will pay Liontown over the course for the product.
Yeah, and the interesting thing about that, from yesterday's close price, that the convertible is priced at double that, so which looks, that's a good thing for Liontown, because effectively they've, if the price gets to $1.80 and they convert all that debt to equity, it's like much better than doing a capital raising at 70 or 80 cents, which was what they would have been forced to do if they didn't get something like this in place. So it's much better on that term.
Yeah.
But it is still debt.
Yeah.
And there is still risks associated with it.
Totally. Yeah. You're giving away some of the equity upside, but you're
it's at a much higher price.
The risk is a bit less, and I think the lesser risk is actually worth that. Just given the fragility of the whole project, given lithium prices and everything going on right now. So, yeah. But mate, how about the coal? It's pretty.
Oh, mate, he was Big T. He's pumped. I feel like this could be Big T back, back with good energy. He's been bloody. They've been frigging trying to, recover from these depressed prices, and I felt the OG Tony Ottaviano back in town.
You felt the energy, mate.
I felt the energy.
It had a bit of sort of twiggy about it, because you're such a good analyst. I love your report. For you, mate. A bit of this, a bit of that.
Just for you, I'm not going to tell you anything because that was around the pricing question. So Trav, what do you got from the call, Cobber?
Mate, let's just give it strong opening from Tonio. Let's play that.
We have extended our relationship with our foundational customer in LG Energy Solutions, and the best way to describe that relationship is deep and long term.
And then, that was what a start, right? And then, they did the spiel, and Hugo of GS asked the first couple of questions. I thought it was worth playing the second one of them for the money miners. I'll play that now.
Around the cost update and mine plan changes, were we still expecting an update there in maybe the coming weeks or this quarter, or is that maybe something that's still being worked through?
Well, I think, Hugo, our response to that is, look, we've got to focus on ramp up, and we want to be able to actually see what our operating costs are so that we can provide the market two things. Firstly, rather than more estimates, we're going to give you actuals and then some guidance. But more importantly, by the time we get to the end of the ramp-up, we'll be able to then understand the impact of the optimisation study, especially on the underground, to give you a better insight as to what our medium to longer-term cost structure will be.
So it appears the market's not going to get updated cost estimates until, literally they have to view the actuals.
Yeah.
I think that's an interesting decision, right? Because it also seems like that body of work, the cost estimates, must have been done, because the response to Hugo's first question was that Liontown were ready to draw down the debt with the prior syndicate if they chose to do so. Now, remember, the CPs were the base case financial model, etc. So they've done the work, they've done the cost estimates that based on the implication of the response to the previous question, but they're choosing intentionally not to release what those estimates are. They want the market to be informed based off the actuals. What do you guys think of that?
Yeah,
they've always had the work done, right? Every company has a good understanding as they are the ones with the best understanding of what the OPEX and the CAPEX is. And like you say, it's a very deliberate decision not to inform the market on what those costs are.
I think it's a function of who the debt's with now, because there's no banks. The banks are gone. It's with two OEMs effectively. So how much easier would that be to deal with than having debt with a bank?
Yeah, you're right. It's I just but it's also like, you know, it's kind of about just keeping shareholders' expectations in line with what actuals are expected to be. Like it's a bit of a funny decision, I think, to be honest. Like, yeah, I can't quite backsolve why you would choose to do that. Maybe it's bad news and you don't want to tell the market it's bad news. I don't know.
Well, but how, like, there's so many unknowns because, like, you know, their cost is going to be, so it's per ton of SC6.
Yeah.
Yeah. So, like, fuck, how difficult would it be to predict your costs right now when you don't even know what the recoveries are going to be, the performance of the mill, when the metric is per ton of bloody spod? It'd be fucking very. Yeah,
things are changing rapidly.
It can go both ways, but it'd be a bloody difficult thing you could easily shoot yourself in the foot of over promising and under delivering in a ramp up there, especially with lithium.
Yeah, I mean that's always the case, right? You've just got to put forward your assumptions if you're going to give them with the best knowledge that you sort of have. One of the key components of the financing that we haven't yet mentioned is that they're getting the cash in 2 days' time. It's in the account. So they've clearly given all those numbers to LG. They would have wanted to see the numbers, obviously, before they give $250 million. And if you're going to be a bit cynical, you can say Liontown's taken the view that it's not to their advantage to share these numbers with the market. There's too much risk or what have you.
Yeah, I think you're probably right.
What do you think, Trav?
I don't like it. I would have liked to have seen those numbers come out, even if they're, you know, everyone should recalibrate their expectations, knowing it's going to be pretty high cost, especially in ramp up. And that, just like, I just think you save yourself disappointment with the actuals if people's expectations are better calibrated to what those actuals could be. But yeah, I don't know. There might be another explanation too.
Fucking between their costs and Bellevue's costs, they're going to be all very different to feasibility studies, put it that way, because so much has changed in 2 years.
For reference, the latest costs were $651 C1 FOB. So
when did that come out?
Aussie, is it JD? Yeah.
Yes,
C1
and that
Aussie, yeah.
Yeah, that's Aussie, mate, and that came out in an update that they did in September 23. One of the key points is that it is on a 4 million tonne per annum assumption, which they're going 3. So makes a bit of a difference.
So I think we've got to sort of, you know, ask the question, is it a good deal? Is this a good financing package? And I think, like, before the details of the instrument actually landed, we would chinwag Matty, and I even made the comment to you, like, if they chose to fully equity fund it at this point in time, like my thought process is that's actually a good thing, just because in my head I thought the risk for Liontown as a company, if they have, you know, a big quantum of debt, is super, super high, kind of given where the lithium market is right now. And you don't want to see a company burdened with heaps of debt that if prices stay where they are for a long period of time, they're not going to be able to service. Like, that's just a horrible outcome for equity holders, like we've seen with Calidus and everything.
I think it's a fucking great deal, just by as I repeat myself, just having all the debt with people that need the product, not with banking syndicates that just don't really care about their product at all. They just want the money. So there's an aligned interest between the debt providers and Kathleen Valley's output. So, and the fact that, you know, it's convertible at double the price and it's cash in the door now. And I think it's fucking good on them.
Yeah. The market likes it. The share price is like,
it was up 10%.
Yeah.
Up 10% from a low price.
Yeah.
But
and then
historically. So
I agree with you. It is a good deal. It's a pretty attractive outcome compared to what was on the table before, right? You had that bullet payment overhang and all that sort of stuff. And while they're forgoing some of that equity upside, they can keep the Ford the Ford facility in place, which you can't get terms like that again. That period in time is over, but they get to keep that, which is positive. I found this, by the way, which is another positive, little cheeky term in the other covenants part. And I'll read it out, but basically says, if LG has converted its notes into shares and there is a takeover offer for Liontown, which the Liontown board has recommended shareholders reject, LG is subject to certain conditions required to follow the Liontown board's recommendation in relation to the offer. So kind of like we've seen in the past with some of these convertibles, notably Next Gen's convertibles with Queen's Road Capital and Solpats and Cap. They bake in this voting alignment thing or whatever. This is kind of like that, right? If LG becomes a big shareholder by virtue of converting into Liontown shares, those they don't get the ability to vote differently to the board. So it's kind of like just enhanced, I guess, power to the board to fend off a hostile bid, and knowing the register makeup there with Gina, that's a strategic deliberate decision as well, which I'm sure was a big part of this deal. Yeah,
because they can't convert the note within the first 6 months, I'm pretty sure, but they can convert on a change of control. So they're it's as we said before, with this current pricing environment, like it is still a lot of bloody debt, well over $500 million in debt. It's like, would they have that amount of debt if they were trying to get this project going now? They probably wouldn't. So but as you said, that Ford facility is frigging great terms, so they may as well leverage off how locking that in when they did. But yeah, it's still you'd always prefer not to have that much on the bloody risk on the balance sheet. But
yeah, and mate, there was one more. I think there's like one more slide in the deck. I think was worth talking to. It's the very last slide. I found it interesting. Now that they've got this kind of enhanced offtake to LG, I'm just looking at the early years. So they've got a lot of product contracted now. You're looking at around that 450,000 tonnes of SC6 from years 2/3, thereabouts, right? And there's a footnote on that slide as well that says there's another 100,000 tonnes might be contracted during ramp up 2. So I'm just a bit curious about what the terms are for Liontown if they can't end up meeting that production number because they're not in production yet. And sometimes shit goes wrong when you're producing, and sometimes you don't have the recovery you thought you were going to have, and sometimes you can't get the tons out. You need to get all those sort of things, right? I know they've done work, but it's probably an offensive comment to some people. But worst case scenario, if they're only producing their 3 million tonne per annum sort of scenario and something doesn't go to plan in a pretty material way, what happens if they can't actually produce the minimum kind of quantity that's contracted? Yeah, I'd be curious to know the terms there.
Yeah, I think looking at 3 million tonne, it was about 550,000-600,000 tonne of spod. So yeah, there's a bit of leeway, but look, if you
things can go wrong.
Things can go wrong.
Yeah,
but bloody look, and this has probably been taken into account by LG, how much the production's been de-risked by the GetWet bladders up there.
They are there.
They are there.
They are there.
And you cannot tell me that was not a material piece of information given to LG to get this over the line.
Yeah, 100%.
Yeah. That mill, there's never going to be a shortage for that mill for the water.
No.
There is the big bloody GetWet backup reservoirs sitting there if, as you say, things go to shit. And there is a chance that percentage chance of going to shit has been significantly reduced by Matt.hall and GetWet.
Those bladders give you flexibility. Mate, LG's bloody convertible just gives Liontown a bit more flexibility.
Mate, Liontown nearly considered a blue chip company, and they trust the GetWet bladders, and every other blue chip company out there should trust them as well.
All you need is a flat ground, and these bladders, mate, last forever.
Yeah. Yeah, Matt.hall, thanks for getting Liontown's $250 million US debt over the line. You are pretty much give yourself a pat on the back.
Employee of the month.
On your Matt.hall.
Employee of the month. I can't wait to put Ali GC up on LinkedIn as our employee of the month every month. The COO. Fucking legend. Right, next up, JD, West African Resources, old WAF. Bit coming out.
We're going to Burkina.
Yeah, mate. Sneaky capital raise.
Yeah, I think one of the real themes of the chat today, fellas, is sort of take the cash when you can get it. And I think that applies to a number of the companies that we're talking about today, obviously quite prominent with the Ford financing there. But like you say, Matty, WAF came out with a fair bit of news. They came out with a capital raise, but that was on the back of coming out with updated feasibility numbers as well as ore reserve and production targets. So the financing here is a bit different to Liontown. First of all, it's a capital raise. And secondly, it's coming on the back of some pretty strong performance. Just look at the spark chart there. You can see up around $1.60. That is pretty solid if you zoom out and look at the last year. So going into the raise, they were capped at 1.6 billion. Though if you use the raise price, capped at 1.4 billion. So they're raising $120 at $1.37. The last closed at $1.59, 14% discount.
Yeah, right. Buddy, that's tell you what, hasn't old AIC Mines, didn't they execute theirs at the bloody right time as well? Reminds me of this one if it goes down. So, JD, why I had it in my head that Kiaka was getting funded by Sambrato cash flows, but obviously not.
As did I, mate.
Or
So-
this is just a safer means.
No, there's been a change in scope. Actually, we'll get into the details on why they're raising the cash. So this is going to see them through with Kiaka. First production is scheduled for Q3 next calendar year, and they've also made the big change of going owner operated. So I think they would have been fine to get there with the cash that they have been printing from Sembrado, as well as the large amount of debt that they have. But if you look at the difference, they're raising 120 million Aussie, and the additional cost going on operated is US 120 million. So it gives me a bit of confidence in saying that. So I think you can look at going owner operated here as a sort of investment on its own. You just see, does it pay off? What sort of returns does it provide? Does it exceed your hurdle rate? And you can clearly see WAF reckon the answer is yes. So far better to take the cash when the market likes you if you're going to equity finance it, because essentially you're just giving up far less of your future earnings to get you over the line.
Yeah, drops the all-in sustaining cost too, JD. Looks better on paper having a bloody owner-operator model because your equipment's capitalised.
Well, mate, let's get into it. So if you look
imagine if Evolution were owner-operator everywhere.
There's always
a
a catch. Yeah, and there's a lot of different details flicking through the updated feasibility study here. So just to start with, a discount rate of 5% is a load of shit. The US 10-year treasury rate is 4.5%. A mine in Burkina Faso does not deserve a 5% discount rate. It's everyone's just got to change that. But moving on, the key change in the updated feasibility, we're comparing numbers from 22 to 2024 now. And that difference is owner operated versus obviously contract mining. It adds US 18 million to pre-production capital and decreases the mining cost over the life of the project by US 293 million. So you got the benefits of working capital, reducing the receivables, and then they're also going to buy bigger excavators and trucks than what the mining contractors would have operated with, which increases the mining rates by 14%. And then, of course, you've got the life of mine cost savings. So they're the big advantages that WAF calls out, and we'll chuck them up on the YouTube here. But if you compare the exact same scope of work, there's been a lift from $430 million to $447 million in CapEx. That's a 4% lift in that 2-year period. That's actually pretty tidy. That's not too bad at all. And if you break out the $118 million that's jumped up, about 85 is coming from buying all the kit, like you say, Matty. You can capitalize that, and then you've got another 18 million to establish site facilities, and then some early mining. They're also doing a lot tighter grade control drilling on the back of work that they've done over the past couple of years. But there's a big sort of catch, and I think if you're going to be cynical about things, you could look at this with a bit of a suspicious eye. They're expanding the scope of work, and they could potentially slide some costs in on that other side of the equation just to sell a good story. I mean, it reminds me a bit of certain companies that go out there and say, in the middle of construction, we need cash flow exploration. While you're constructing a mine, it gives that story to investors to say, hey, it's not actually to help us with the project that might not be going so well. So being from the outside, it's super, super hard to tell if something's actually gone wrong. I don't think it has in this case. But if you are going to raise cash at this point in time, halfway through a project build, then you're going to want to sell a pretty good story to investors out there. And a smaller sort of detail is that, once again, these guys haven't broken out transaction costs. Every company does it. you usually have to pay these transaction costs. So I don't know why companies don't just break them out on their own. They bundle them in with everything else. Matty, to your point on all-in sustaining costs, I would have thought they sort of come down with everything that they've done, but all-in sustaining costs have actually jumped up from $1,050 to $1,200. So if you think about it, they are increasing production. You think you get economies of scale, but they've got a few other things working against them. So one of the reasons is higher diesel costs. And then you've also got gold royalty changes. So Burkina, which we'll get into in a bit, is not the most stable. They've updated the mining code. They essentially have to pay more in royalties.
Yeah.
Then you've also got operating cost inflation, as well as that tighter grade control drilling, like I mentioned. All of that is heavily outweighing the reductions that you're getting from owning the fleet, as well as increasing more gold to lift the all-in sustaining cost up a fair bit.
Yeah. So, look, WAF's always, notorious, and a lot of the African miners are notoriously traded on the very low African multiples, you'd say. JD, what's your bloody eye running over the valuation at the moment?
Mate, not a lot has really changed. Despite looking at the share price, you can see it's been on a bit of a tear, but the gold price has also been on a tear. So if you look at the multiples that these things trade on, things haven't really traded massively. We're talking about 2.5 times EV to EBITDA using next year's earnings, and that's less than half a year of Kiaka's earnings. That looks much cheaper if you look at FY26. I think one of the big things to look at is Burkina and West Africa, and you did a solid deep dive into Niger a few weeks ago, Matty. It's a very similar story in Burkina. The Russians are trying to expand their influence. They're not at the same level as what they are in other countries just yet, but they're working hard to expand their influence in Burkina Faso. And WAF hasn't of yet been disrupted by this, but it's not so friendly. And then you mix in other things, like I said, the mining code being tweaked. You see another report this morning from the Ivory Coast. They're looking to increase state profits. Revising the mining code is the way they're going to do this. Obviously, it's not the same country, but I think a lot of investors paint the countries in this region all with the same brush. So, you've got only a few amount of dollars looking at these investments, and it doesn't really help, as well as the fact that you've got a few other alternatives. You've got some companies perhaps a bit cheaper or with more diversified risk with operations in a few countries. So I think they're looking as cheap as ever, but obviously they've got that construction risk to work through.
Yeah, very good, JD, our African correspondent. Right, let's head over to bloody South America, to Carnival, straight over to Brazil, old Centaurus, the Jaguar nickel project, the feasibility studies finally come out.
Much awaited.
Yeah, November last year, they said the DFS will be out in Q1 2024. So let's call this the
Mate,
I think they've kicked it down the road.
I think that was already a big delay.
That was a kick down as well.
There were a few kicks, but it's here. That's what matters.
Yeah, it's here. So, look, the first week of Q3, let's say, you nearly give them the end of Q2. It's bloody close enough. So, as expected, they're scrapping the downstream part of it. It's just nickel concentrate only. So, 3.5 million tonne per annum conventional nickel float plant, 18-year mine life, 18.7 thousand tonnes of contained nickel per year. So the headline numbers comes out with Aussie 1 bill MPV, IRR of 31%. Now, their figures it's really helped along by the low cost power provided by the Brazilian power grid, which is fed by hydro. So it's
beautiful.
So that's one of the big kickers. So CapEx US 371 mil, so 67.8 million of that US is in pre-strip. So for the pits, I think they do that for the first couple of years, so a bit of tons to move. $100 for the processing plant. So target an FID for Q2 2025. So they've got environmental approvals ongoing and, the development timeline, but in their model, they've used a spot price of US $8.98 per pound for the nickel. Current spot price is $7.75 per pound US. So at today's prices, the MPV is not 1 billion; it's about 611 Aussie, with an IRR of 23%. So it's doable at today's prices. So the recoveries and payabilities. So look, the recovery's probably a bit conservative now. It's 73% life of mine. It was 78% in the 2021 scope and study. So they've dropped that a bit. 76%.
What's normal in nickel?
Oh, fuck if I know. Yeah, 70 to 80 or something. Yeah, let's just run with that. 76% payability on the nickel. So that was previously 75%. So roundabouts. I think a lot will depend on where it bloody goes, I would imagine. Right. So
do you call it more conservative, Matty, or do you just think they've got more info to bake into it?
Well, the recovery could be more conservative, or they got more info that would indicate they won't get 78%. And then payability, that's a whole nother, should be a thumb suck until you got something in place of, where you're going to bloody who you're selling it to. So I think if you
76 is around about a sort of standard type of number.
Depends if you're selling to China or BHP. Who knows? But we'll get to that. Big risk to consider. Jump straight out me like a bloody what is it? A
sore thumb.
Sore thumb.
Yeah,
that's it. They read this. They will need to discharge excess water at times based on historic and current rainfall data, and a water treatment facility has been included in the process plant scope. And now remember, this is sulfides.
Matty, you thinking what I'm thinking, mate?
Enter CRE insurance. This is potentially Capricorn Copper 2.0. Discharging of water from a sulfide mine. So Centaurus, call straight away. Call bloody Stephen Traud in the CRE Perth office and get this bloody insurance sorted right now. Don't be Capricorn Copper 2.0. I do not want to talk about it. I want you to be Jaguar 1.0. Make sure that bloody water treatment plant is elevated and not going to get fucking flooded, and just get bloody CRE insurance to make sure that bloody, what do they call it? Insurance
policy?
Policy. That's it. Make sure that bloody insurance policy is bloody spot on. Stephen Traud will bloody sort you out. Anyway,
good
I
spot,
do not want to talk about another fucking sulfide discharge thing. So get it done right. A lot of commentary around the funding. So it said the funding will be likely equity at the project level with maybe some debt. So as they mentioned, it will, meaning they want to effectively sell part of the project to get a partner in. So it will be a partner that is looking to diversify their nickel exposure away from that Indonesia stranglehold is how they're sort of articulating it, which, makes sense. The concentrate, this is interesting, and this is why I think there might be a bit of appeal for partners to this. So their iron MgO ratio is 7.2 for their life of mine concentrate. So remember the Kalgoorlie smelter, that runs at a minimum of 5 iron to MgO, and that was previously heavily contingent on getting that Kambalda style concentrate that has the higher iron to MgO ratio to offset the lower stuff from Mount Keith, and even Leinster wasn't high enough. So I think Leinster, they buggered around with the con to get it up. But anyway, so that 7.2 that's a pretty bloody good quality con to get temperatures up in smelters. So I'd say that's going to be pretty attractive. And you'll also see there's 0.8 in the concentrate they're selling. There's 0.85% copper in it, 0.24 bloody % cobalt. So they detail that the nickel is going to be the only payable metal in the concentrate for most months of the operation. But if you've got a bit of copper in there, it's just another little freebie for a bloody downstream processor to take. So anyway, we'll wait and see if this sparks any interest from, potential partners as a bit of a counter-cyclical bet on nickel. Let's throw it around. Who do you think would be interested in this?
I'll probably sound like an idiot trying to guess, but
you'll never sound like an idiot, Trav. Lean forward with confidence. First one that comes to mind.
It's probably
I think
stupid
you're asking
call.
for us to say why, Lou.
It's probably a stupid call, but I kind of think the the Saudis who've, clearly
Oh, that's interesting.
they've already bought 10% interest in Vale's base metals business. And this is like, I could do something here. It's just too small of a bite size for them in my mind. So that's why I just kind of think maybe not. But yeah, there's a I mean, didn't this asset used to be Vale's before? It was in their base metal portfolio?
That was the whole thing. They got rid of the royalty to them, wasn't it? Yeah, that because like the world, from what I've been told, the world is short of nickel sulfide concentrate, but there's not much incentive to bring on the nickel sulfides because the LME pricing for nickel is that much dictated by all the bulk shit coming out of Indonesia. So you don't get anything because you're just mining sulfide. You're just getting paid for nickel. And until we see any sort of, so it's whether like a Trafigura or a Glencore might look at it as a trader and think, fuck, we could lock up a lot of nickel sulfide supply, lock up a lot of something that the world is short of. So that'd be a one. This one's, would you like to get to my out there ones? These are the best ones.
You're going to guess a uranium producer or something.
Oh, geez, I haven't even thought of that.
Tell me.
Korea or Japan. So consider that iron MgO ratio is 7.2 and that Kalgoorlie smelter needing the higher stuff to maintain a minimum of 5.
Yeah.
Imagine, now the BHP announcement is imminent on the future of Nickel West. So whether if BHP keep it or someone else ends up with it, I wonder if concentrate gets shipped all over the world. Like it can go to China. God, they could bloody ship it here and train it to Kalgoorlie. Imagine if that concentrate was used to go into the Kalgoorlie smelter, and which would, I would say, negate the need to upgrade it to handle the lower iron ratios. That's out there.
That is yeah.
You never know.
You miss 100% of the shots you don't take, man.
Fuck it. It sounds good. I reckon people mightn't have even thought about it yet, but they sure as hell are now.
Now it's on the bloody blackboard.
Why Lou is the other one? Because
I don't think they will.
Well, we heard. I think they got so much shit to sort out with un-BHPing themselves for their future of nickel. So a bit to go there. Because we did hear Luca and Turks say that on our show that they'd take $9 a pound any day of the week. Do you think it's coincidence that the Centaurus have put in their price deck $8.98? I think they are sending a message to Wailu through the ether via this study. Come and talk to us. God, mate, it's just I don't miss anything.
Yeah, maybe. You never know.
I told you they were out there.
Very, very out there.
Hey, but all possible. Nothing I say is not possible.
They're all possible. They're all possible. Yeah.
Go nickel.
So do you think it's a good project? Like, it looks like it stacks up, right? It looks like it'll be a mine, right?
What's another nickel sulfide project you can think of that has potential to go now?
I can't think of one that's in a single asset company. Maybe there's some development options in majors, but I can't think of one.
Yeah, this one actually, if it can survive in this pricing environment, you'd class it as a pretty good project. Oh, ding, ding, ding. Ali GC owns Centaurus.
Does she?
And
WAF. So
bloody Ali GC. God,
ding, ding,
look at us. Full disclosure across the board here. So JD, we mentioned bloody moving on to other sulfides, 29 metals. What is going on with the market darlings?
Mate, we've got very, very good. We've got a couple other stories to run through. So first of all, this one's just a quick mention. Good on 29 metals for listening to investors. I think they must have taken a bit of flack for it. With consideration of queries from market participants was their wording. They've come out and said what the rate they're paying on the offtake financing deal that they signed with Glencore is. So hopefully next up we can see them come out with the actual length or the term of that facility, but good on them for taking a step in the right direction. Then Maddie, you chucked in a bit of news Ramelius was the buyer of Spartan.
Oh, this is me. Yeah,
Oh,
no,
yeah, thanks,
they came
Trav.
out. They came out.
I can't take credit for everything
Yeah,
you
yeah.
give me today.
So this morning, Ramelius is they've got 18% of Spartan now. So yeah, some people were thinking, oh, is there competitive tension? Is someone else buying the shares? But it was Ramelius that did the big block yesterday, not a third party. So no hint of a bidding war at this stage, but Ramelius firmly in the box seat there for a future change of control.
And that it's still fucking confusing what is going on with that Tembo, because I think there was 54 million shares went through yesterday, and the Tembo stake was 52 that we sort of haven't accounted, or it was the other way around. I'm not sure, but it's indicating possibly it went in that first raid somewhere.
Yeah.
So anyway,
Double
they're
counting
nearly
something.
20%. And we'll spitballing today. Like there just does not seem like any outcome other than Ramelius having to take Spartan eventually, because look, even if they're a 20% shareholder, like even if they weren't a shareholder, they could have treated the break of day dirt at bloody Dalgaranga if they wanted. Like there would, it just doesn't seem to be any other intention that Ramelius has than officially merging or taking over. It might be a bloody merger.
Yeah.
You never know. So it just seems like that is the only way it's going, and they put their foot on it in case Westgold come to the party, and after if the Karora have failed, or maybe a Bellevue might have been looking at it.
But yeah, the other intention is just to make sure no one else has a crack. You know,
they can't now
with a 20% stake. You control the cards.
Yeah.
Clearly.
Yeah. So, but
Also,
would you purely take that 20% without a future intention of taking it, just to have control of it? Just so no one else got it?
Yeah, exactly.
Would you hold that forever?
Not forever.
You'd have to have
No,
you'd have to have an intention.
Everything's, but maybe you just want to block people for a while, and then it's not like price is guaranteed to go up forever. It might come down, and then at a lower price,
Yeah, true.
put in an offer.
Yeah. Go Australia.
Okay. We got a bit more on the met coal front, fellas. Up 9% overnight. Obviously, we spoke at the fire at Grosvenor, so up to US $254 a ton. Looking at the US names, saw AMR up 17%, Warrior by the same, and Peabody up 7%. As we sort of alluded to on the show yesterday, I think a lot of these names in the US will outperform the Aussie ones because of the sliding scale of the Queensland royalties. Means essentially the more you earn, the greater portion you're going to pay to the state. On cobalt news, there was some pretty interesting stuff here. Actually, I found it really interesting. I know you mentioned it as well, Trav, but a couple of fundies are buying physical cobalt. So Anchorage and Square Point were named. So it comes on the back of China a few weeks ago, the country saying they're going to stockpile a bit of cobalt as well, which I just find fascinating. Cobalt's obviously been massively beaten up on the back of ramped up supply out of Central African copper projects and Indonesian nickel projects. So you've got a bit of a dynamic that's playing out here with a liquid futures market, excess supply coming online at the moment, meaning these financial players can come in, buy a bit, they can hedge out their position if they want, and lock in a sale via a futures contract in the future, and then you've sort of made a bit of a difference minus the holding costs. There is the element that the contract which they do it through, the CME, needs cash settlement. So you can't actually go and deliver your cobalt there. You need to actually get someone to buy the physical stuff off of you. And then on the Chinese front, obviously what they're doing is a bit different. They're, from a state interest point of view, using one of their departments to go and buy the metal. They're buying refined cobalt. They've done this in the past, but this is by far the largest scale at which they've done it. And I just find it fascinating because you've got the US accusing them of, flooding the market and all this sort of stuff. But who knows? Maybe it's another example of China being pretty astute strategic movers.
Yeah. But JD, you're friggin' on fire this RV with the bloody wrap-up. What else you got? Avebury.
Avebury. One more, fellas. This was interesting. I don't have too much info here, and I'm sure there's a lot of people out there, or a few people out there that know a lot about it, but a minority shareholder in the fallen Mallee Resources has spoken up, and they're not happy. A couple of punters might remember this name. This used to be called Myanmar Metals. And they ran into a bit of trouble up in Myanmar and had to do a bit of rebranding. But you've got,
I wonder, just to get Myanmar off the name.
Wipe it all out of the investor's memory, Matty, and just restart again. It's the beautiful aspect of the ASX. So this commodity trader, Hartree Partners, they're backed by Oaktree Capital. Now, Hartree was the lender as well as the largest shareholder. And then you've got this minority shareholder, a fellow called Jeff Summers, who actually became a director at Mallee shortly before the administrators were called in. So you've got it being reported that one party submitted a binding proposal in November of last year, but that was on the back of quite a bit of interest, quite a few non-binding offers. And then this guy, Jeff Summers, with the backing of a Middle Eastern group, is saying he sort of put forward a roughly $112 million bid that was unsuccessful. He then came out last week and said, if my first bid was successful, because he put in another one afterwards, the mine would be operating and no one would have lost their job, which is pretty punchy given the environment they were operating in. It's then been reported that Hartree's bid involved, clearing the outstanding debt of the company, of which they had contributed, obviously, plus just $800,000 in cash. So that means equity investors would have got more or less wiped out. There's been some pretty angry lawyers' letters flying about. But like I said, I'm sure there's a lot more to this one, but below the surface. And if people want to get in touch and let us know what they think's going on, I'm sure there are a few people in that sort of position, then please do, because I think there's a whole lot more than meets the eye here. And I'm sure, as we've sort of touched on in the show in the past, it could be a bit of a strategic plant rather than asset, I'd say.
GC@moneyofmine.com if you want to get in touch.
That's the one.
Bloody beautiful. Righto, great show, lads. Thanks to all the partners, the drillers and Geo's best friend, Axis Mining Technology. Also got MMS, Mineral Mining Services, VRIFY, GetWet Solutions, DSI Underground, Silverstone, CRE Insurance, Centaurus, call CRE, ASAP, WA Waterboards, K-Drill, and Bloody Spark. How good is it?
Hooroo.
Good.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.